Welcome to today's Explainer. Right now, we're looking at one of the absolute most fascinating geopolitical and economic puzzles of our time. When you look out at the global tech landscape today, it is just completely dominated by these massive titans out of the US and China. But that brings up a really glaring question. Where are the European tech giants? I mean, Europe has incredible talent, they have vast resources and massive enterprise markets. And yet, in this frantic race to build the future of artificial intelligence, they're noticeably falling behind. So today, we're going to dig into the data, the timelines, and the hard numbers to figure out exactly why this is happening.
Okay, let's dive right into this because it's kind of the elephant in the room, right? Pretty much every major AI company you can think of off the top of your head is either American or Chinese. So why is that? Well, to put it simply, while the rest of the world was sprinting to actually build AI, Europe's very first major move in the AI race wasn't to build a company at all. It was to regulate them.
So here's our quick roadmap for today. First, where are Europe's AI giants? 2, the regulate first strategy. 3, the massive AI funding gap. 4, Mistral's regulation loophole. And 5, the build versus regulate gamble. Let's start with section 1. Where are Europe's AI giants?
So what we're seeing is a stark contrast in strategic philosophies. The US and China, they've leaned heavily into this build-first mentality. They're pouring resources into innovation, just letting the market run at breakneck speed. Europe, on the other hand, went with a regulate-first approach, pushing through the AI Act in 2024, which is actually the first comprehensive AI law anywhere in the world. And the on-the-ground reality of these two different paths is pretty shocking. Just to give you an example, gathering all the filings, the permits, the administrative green lights to launch a tech initiative, that can take just 6 weeks in the US. In France, that exact same process can take up to 16 months.
And this regulatory friction, it definitely hasn't gone unnoticed. Back in 2024, Mario Draghi, the highly respected former head of the European Central Bank, published this really stark report. He explicitly warned that Europe's economy is falling structurally behind the US and China, and he pointed right at that regulatory weight as a primary reason why the continent risks becoming a place of, as he put it, strategic surprises. Basically, a place where Europe is just constantly caught off guard by innovations like ChatGPT happening everywhere else. Moving on to section 2, the regulate first strategy. Europe's entire game plan here relies on something known as the Brussels effect. It's essentially this concept of writing the rules first, with the expectation that the rest of the world will eventually just build their tech around your standard. The EU isn't only regulating for their own citizens. They're making a massive bet that their huge consumer market will literally force global companies to adopt European standards worldwide, just to maintain access to European customers. And this perfectly illustrates why they thought that would work. Back in 2018, Europe did the exact same thing with data privacy when they introduced GDPR. And, well, it worked. Most big tech companies ended up building their global privacy tools around those GDPR rules. So fast forward to 2024, they passed the AI Act betting on that exact same leverage. But as we're going to see with their recent decision to delay enforcement until 2026, AI is a completely different beast than data privacy. The market's reaction has been, frankly, completely different. Which brings us to section 3, the massive AI funding gap. To put it bluntly, the disparity in global AI funding for 2025 is just staggering. The United States pulled in an overwhelming 70% of global AI funding. Europe pulled in just 6%. Now, to remain entirely objective here, we have to clarify that this massive gap actually existed before a single clause of the AI Act became enforceable. The investment community was already pulling their money back, anticipating all that regulatory friction before the ink on the law was even dry. When you look at the structural math underneath this, it's pretty undeniable. Between 2020 and 2025, the total venture capital pool in the US was a massive 1.3 trillion euros, and they pushed 34% of that directly into AI. Europe just had a much smaller pool to begin with, around 252 billion euros, and they only committed 18% of it to AI. Plus, if you look at the history, US venture funds return about 14.6% compared to Europe's 8.6%. So if you're an investor and your goal is to maximize returns, your choice is already heavily skewed toward the American market before you even factor in a single AI regulation. But let's bring this down to earth for a second and think about an everyday founder. Imagine you're building a new AI hiring tool. If you launch that startup in San Francisco right now, you face zero federal AI regulation. But if you launch that exact same startup in Paris, Independent studies show you could face compliance costs ranging from 50,000 to, actually, for some, upwards of €500,000 just to get your very first customer. Now, we do need to be totally fair to the EU here. Their intent is genuinely about public protection. Flawed algorithms in hiring or healthcare or credit scoring can cause real human damage if they're biased. So the EU is trying to build a safety net. But for a scrappy, early-stage startup, a price tag like that is often just insurmountable. Let's look at Section 4, Mistral's Strategic Regulation Loophole. Mistral is such a fascinating case study in all of this. They were built by engineers who actually left Google's DeepMind, and their valuation has just climbed at lightning speed. They recently entered talks that could value the company at nearly €20 billion. But even Europe's absolute reigning champion is fighting a really steep uphill battle compared to its American peers. OpenAI has raised over $18 billion. Anthropic sits around $8 billion. Mistral? They are trying to compete on that same global stage, having raised around $3 billion. So they're doing incredibly impressive work, but with significantly less capital in the bank. So the crucial question here is, how exactly is Mistral thriving in such a highly regulated environment? Well, it all comes down to how the AI Act is actually structured. The law hits the hardest at what's called the application layer. Those are the specific products everyday people interact with, like our hypothetical hiring tool. But Mistral operates at the model layer. They're building the underlying foundation, the core engine that other companies plug into. And right now, the AI Act goes much, much easier on that model layer. So Mistral's success is partly just incredible execution, for sure, but it's also the strategic brilliance of choosing to drive in the one lane where the regulatory traffic is still light. And honestly, Europe desperately needs Mistral to succeed because of one absolutely crucial concept: sovereign AI. As it stands today, Europe controls only about 5% of global AI computing power. Think about that. The future of hospitals, schools, courts, militaries, they're all going to run on AI infrastructure. European leaders argue, and understandably so, that control over this highly critical infrastructure shouldn't sit entirely in the hands of the US and China. They need homegrown champions to guarantee their own digital sovereignty over the next 50 years. Which brings us to our final part, Section 5, the build versus regulate gamble. Very recently, the reality of this whole situation actually forced the EU's hand. Lawmakers reached a deal to delay the AI Act's toughest high-risk obligations until May 2026. That pushes things back by a year and a half. Officially, Brussels is calling this a simplification process, but unofficially, it's a pretty clear admission that the auditors, the standards boards, and the businesses themselves simply were not ready to shoulder that massive compliance burden yet. The actual structure of the law hasn't changed, but Europe basically just bought itself a little extra runway. And that leaves us with this final, really provocative thought. The US and China, they built their tech giants first, and they figure they'll sort out the rules later. Europe wrote the rules first, and now they're desperately trying to build the companies inside of those rules. Will this delayed enforcement finally give European innovators the breathing room they need to close that massive 70% to 6% funding gap? Or have they already regulated themselves completely out of the most important technological race of the century? Basically, does the order of building versus regulating actually matter? That's the billion-dollar question that will ultimately decide Europe's next decade. Thank you so much for joining me for today's Explainer. I really hope this deep dive gave you a much clearer picture of where the global AI landscape stands right now.